Hello everyone, I'm Dr. Stock, and this feels like a 3-video sort of day. So I didn't expect to put one out this early again on Tesla, but oh my gosh, what reasons didn't we have for Tesla's price moving up the way that it did? So I made my video about them last night talking, hey, we have some time to sit back and watch this one probably before the next big jump. And it's like the universe likes to punish me for saying that we have some time, because my goodness, time is not what we got. But we did, however, get some good news, and I'm going to share a whole ton of that good news with you in this video, and I do so in quick order. In the spirit of quickness, do yourself a favor down in the description of this video, whether it's right now or at the end of this video, I will remind you, click that link for Moo, sign up, make your deposit. $100 or more gets you 17 free stocks. Here's what it looks like. By depositing $100, you get 7 free stocks. By depositing $1,000 or more, you get 17 free stocks. Either one of those includes 2 AI draws, and then the other stocks are valued up to $2,000 a piece. This offer does expire, well, in next 10 days. The time is ticking on this offer. Take advantage of it. Let me move on to my Patreon. If you want to hear more of my commentary, see more of my Patreon exclusives, that link is also found down in the description. Now, I'm too excited to hold back. I want to talk about Tesla, so that's exactly what we'll do. I'm Dr. Stock, Doctor of Education. Let's get right into the content. All right, so first, do you remember our girl, Cathie Wood? And man, oh man, she was queen back in 2020, and then 2021, we're like, go queen, long live the queen. And then like all tech started selling off, all growth stocks started selling off. And then in 2022, the Fed started raising rates, which hurts growth and hurts tech. And so 2022 is an absolute nightmare. And all the while, kudos to her for staying the course and really diamond handing on to a lot of the plays, Tesla being one of them. She comes along, and then here, I wanted to call back to this. This is not new. This goes back, I believe January 20th is from when this article comes from. That's 2 months ago, but I do want to remind you about what she said, because this says that for Tesla stock, 5 times the recent price would be $653, 13 times would be almost $1,700 per share, and that's assuming, and this is by 2027, that we see the autonomous driving come in, and without autonomous driving still be at that 653. So there's also the talk here about the Fed raising the rates like they did, putting a dagger in their strategies. But again, Tesla gets mentioned here, and it says, but Tesla stands to benefit in several areas, and talking about it as being one of the most important AI beneficiaries in the form of autonomous taxi platforms, ultimately powered by AI. So this is huge too. Tesla positioned to cut costs. They are the only EV car maker that is able to capitalize on the margins the way that they have, and also cut prices and still have margin left over. So they are just super awesomely positioned in the space, in a growing industry, and also being the tech company that they are, in the robotics innovations that they've made, the battery innovations that they've made. There's a reason why the people are so bullish on it, and why it's such an exciting company and grows the way that it does. So Cathie Wood has been in on this for a long time. So let's move on from there to some of the news. So Tesla is showing strength through some of the insurance reports. I think it's new electric vehicle insurance that they have moving up from 1 week to the next in China. So this is actually a bit of relief that we have, seeing that the insurance registrations are going up, because that China demand is a huge part of Tesla's business. So that softness coming from China was an area of concern. Do people want Teslas anymore? And right now, having that demand tick up the way that it has is a good sign that Teslas are still desirable in China, bring a lot of confidence back to investors. And this starts to get into that bullish move that we see happening in Tesla today. Not the biggest reason, but it's certainly a contributing factor. Let's move on. So here, in this article, this one says Tesla outpaced European competitors in February, they're growing European market share. Words are hard sometimes, especially when I'm excited. Let's move on from there. ACEA said that Tesla EU registrations, which reflected, rose to almost 20, so just over 19,000 this February from 12,000 the prior period. So 50% jump outpaced every car company in the European market through brands like Stellantis, Alfa Romeo, Volkswagen, growing faster than all the rest, outpacing them like they have. That showing that further demand. So demand from China recovering, demand in Europe growing, outpacing the other vehicles. Like, this is exactly what we would hope to happen. Anybody who's bullish on Tesla wanted to see this sort of news come out. Still not the biggest news that we have. So just in case you missed it, so Tesla exits junk rated world after Moody's upgrade. So Tesla was considered a speculative investment, a high risk scenario thing to invest in. However, Moody's gave them an upgrade. They are now investment grade. So what I like about the Yahoo Finance article here is they talk about what that means in order. Well, here it says that now credit rating providers are playing catch up, giving heft to the automaker's blue chip valuation. And well, thank goodness it's about time that they start seeing what retail has been seeing for a long time. And it says here, upgrading the Austin-based firm's credit score by one notch to Baa3, which actually sounds a little bit like something from Diablo. I don't know if you have played any of those, but Baal was one of the demons. Baal, B-A-A-L. I always said Baal. In any case, moving on from there. So this is the first investment grade rating, and that might not mean a lot to you. I have Moody's brought up here, so this is from Moody's themselves. And right here, it says obligations rated BAA are judged to be medium grade and subject to moderate credit risk, which is much better than when you look one down, which talks about it being speculative. When things are speculative, you don't know if that company is going to be able to return to its shareholders. However, when it starts to be rated investment grade, which is where we start with BAA, that there might be some credit risk involved in that in the case of a default to the investors. Now, about the 3, that goes with their prime ratings right here. And it says that they have an acceptable ability to repay short-term obligations, as opposed to companies that wouldn't have a good ability to pay those short-term obligations. And then prime 2, prime 1, lower score wins here. It's sort of like golf rules. So they actually have a little bit of a table here breaking that down for the prime ratings. And they are at the very bottom of investment grade. You'll notice everything below investment grade is not prime. So let's go back to the Yahoo article that we have here, and we will check out the charts on Tesla. So thank you if you stuck around this long. And man, I'm excited about this. This is such a good day. The markets overall. I'll make another video on the markets. I'll stick to this one being about Tesla, but it really was just cool. So here we have Renee Lipsch, I'm going to say, which actually, have you guys ever watched Rugrats? The Nickelodeon cartoon from back in the 90s. There was a doctor on that the name started that way. I won't go into detail here about that. But in any case, so Tesla will maintain its positions as one of the leading manufacturers of electric battery manufacturers. My goodness. One of the leading manufacturers of battery electric vehicles as the company further solidifies its global footprint. That's the news that we got today. It's absolutely happening. And it says the credit grader also cited automakers expanding product offering, including early production of the Cybertruck slated for later this year. Perfect. Talk about paying off some debt. Let's get to the really good part of this. There we go. Moody's uplift has both symbolic and practical value. Companies that rise from junk investment grade typically benefit from cheaper financing by attracting deeper pool of investors. That cheaper financing, that means it translates to their bottom line, which helps out their PE ratio, which means that Tesla stands to profit directly from this, and the investors who are in this at lower price values get a better deal out of this, and that's why we see the price action happening. So I'm going to jump out of this. This credit upgrade should not be underestimated. This is the prime reason, the main reason why the stock moved the way that it did. The market bias helped. The positive news that we had out of China and Europe most definitely helped. But this was really what moved it. All right, so let's go over to the Tesla chart. There we go. And let's pop that out so we can see it a little bit better. And you can see the price action that's had. And if I zoom out a little bit more, still on the downtrend. We have not broken up above that line, although it looks like if we slap a trend line, and I'm not going to make this too much of a technical analysis video, but it honestly looks like there's a reason why it stopped there just shy of that 200 mark. So 200 would actually be that next area that we have. And well, you know what? Let's talk a little bit of technical analysis about this after we take a look at the price action. So we were dancing along the 50-day. I said that in my morning video, and today we gap up off of that. We don't quite make it to that 200, the high price today, and the market's going to close in the next minute here as of the recording of this video. 1 penny shy of touching 198. So that's something incredible for us, and it's not surprising, not only from that diagonal line, but probably from the even sturdier resistance that we have at 200. And let me zoom out a little bit from that, because I want to talk, like I said, just a little bit of TA, because I think it's really worthwhile. Especially with the FOMC meeting tomorrow, I'd be remiss if I didn't mention that. As a matter of fact, this orange line right here, I'll put a horizontal line on anyway. Now it's orange and blue, so it makes that kind of brownish look here. We're right smack dab in between the 50-day, 200-day. This is like a little bit of a head and shoulder sort of pattern. You can kind of think of that being like a neckline. There could be a big move for Tesla, either back down to the 50-day, I would say would be the most likely course of action, depending on what news we get from the Fed. If this momentum continues, and it can absolutely continue, we have room to drift up to this previous high that we had here at about 210. So being about $13 up, $12 up from where it closed today, that's another 6%. And if we really get a strong day with a strong market bias, maybe we can even come back and retest these previous highs at 215, 217. Whatever it is, I don't think that we would break up above the 200-day. So I'll save it for my market analysis for right now. I still think that tomorrow is going to be a very volatile day, and the market can interpret whatever the Fed says in any number of ways. But for Tesla, I don't think it holds here very long. I think we either come back down to the 50-day, or maybe we come up a little bit closer to these previous highs up towards, I think that 210 is actually a really solid area for Tesla, assuming that we don't get any other news that causes it to just amplify the momentum that it currently has, which we actually did go back up in the RSI, back up into bullish territory with today's movement in the markets. So going up to 58, good. We're not in any sort of overbought territory, also a good thing. And it is possible with the market bias going against us. So if we have a strong red day tomorrow, that could pull back from that price. If we want to see it continue up, we do need to see it break up above 200 and actually close up above 200. And we want to see it on a strong high volume day to say that resistance at about that 200 level is firmly broken. All right, so let me summarize this thing. Tesla, it's the one stock out of the three that I talked about in my last video: Apple, Nvidia, Tesla. Apple and Nvidia, I thought immediate attention. Tesla, I was like, take your time and, work through this. And remember, none of this is saying to buy or sell. I can't do that. I also would never give you financial advice, but I will point out opportunities when I find them, and I will toss out whatever education I can. So for Tesla, of course, I said, you probably got some time on this one. And that's me. I forgot to knock on wood. I forgot to cross my fingers. I forgot to cross my eyes, whatever it is that I'm supposed to do. I didn't do it. And of course I said, most likely our next catalyst comes April 2nd when they have their quarterly deliveries, which, by the way, be on the lookout for quarterly deliveries. Now, that is a Sunday, so I don't know if that affects the date, but it usually is the second day of the month after a quarter closes. So after September would close, we saw on October 2nd, and then January 2nd after December close, and after March close, April 2nd should be when we get those deliveries. Looking for about 445,000. We're looking for full year guidance, by the way, when they announce their earnings, to still come out at that 1.8 million to 2 million range. So Elon said conservatively 1.8 million. He said, I'd rather say 2, but you never know what's going to happen. It always seems like there's something that gets in our way and just keeps us from hitting those numbers that we should be able to hit. So I don't know if that 2 million vehicles is that theoretical maximum that he's talking about. And then when we talk about the actual execution of producing and delivering the vehicles, that it comes out to 1.8 million instead. That is about a 40% increase year over year, though, from December 2022 to December 2023, if that's what we see happening. So for Tesla, why not watch it? I can't tell you to invest in it. If you're already invested in it, you probably all really enjoyed today. You probably enjoyed a lot of this ride that you saw. I do think that there's going to still be a lot of opportunity from what we have right here. And if we go back to talking about Cathie Wood, according to what she has, her most bullish case would be at an 8x at least, actually 8.5x from where we currently sit, getting up to that $1,700 mark. I don't know that I can see that happening. However, Tesla is a company that puts out a lot of surprises. So going up from here, even that 50% gain, if we get the right market conditions for this, the next bull run that we hit, pushing up another 50% from where we're at, especially if the Fed ends up dropping rates and starts stimulating the economy, and maybe we hit another quantitative easing cycle. So those could be things that would allow Tesla to experience just that explosive growth that we saw before. And just keep in mind, the stuff that we saw before was when Tesla was a younger company that just barely hit profitability. It doesn't have too many years at all under its belt of being profitable, and it's already turned into investment grade. And it's one of the companies that I think in the growth area that still has a very, very bright future on it that keeps on delivering on its promises. So that's what I have for you guys. I hope that you like my commentary. If you'd like to hear more of it, check out the link for the Patreon down in the description. Also, please don't forget, while you're looking down in the description, get that link for Moo. Sign up, deposit your money, get your free stocks, enjoy your AI draws that come along with the deposit. You get 2 of them, whether you deposit $100 or more or $1,000 or more, and then also the other free stocks valued up to $2,000. You're helping yourself, and as an added benefit, you know that you get to help me and my family by allowing me more time to come here and talk with all of you. I really appreciate it. Like this video. If you did like this video, hit the subscribe button to hear more of my commentary and ring that notification bell to see any time that my videos come out. I am Dr. Stock, Doctor of Education. We'll see you in the next video.